please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, it's all-around recovery that we are seeing as far as markets go. The Nifty is almost at the day's high, 10,182. The day's high is about 4 or 5 points from where we are. The Nifty Bank has basically given up all of the losses. It's trading in the green just by a little much, nothing very large. The Midcap index is up about 1.25% as well. So it's a pretty strong kind of day and a strong start to the week as well after a 4-day weekend. Let's hope that the next hour and a half, 2 hours, we kind of stay with these kind of gains, maybe even with us to take us through what he makes of things. Ashwani, thanks very much. So we're up 70, good going, and what would you make of this? More to go?
See, like I said, that Nifty was in a 10,100, 10,200 band, the Nifty futures. That level has been crossed on the upside. Plus, you now have some damage control statements from Axis Bank, etc. So what's happened today on the Bank Nifty is that the money which came out of Axis and ICICI went into Kotak Mahindra, HDFC Bank. So Bank Nifty has things on both sides. But from here it seems like short covering is picking up, and possibly the market will close on the upside today. So if I had to take a trade right now for the next couple of hours, you would tend to take a long on the Bank Nifty now for the next couple of hours, because what you are seeing is also short covering on ICICI and Axis. So that way, if the Nifty goes up, Bank Nifty will go up a little less, but short covering will happen even out there. For the next few days, Nifty is likely to outperform Bank Nifty, and while Bank Nifty could be choppy and ranging between 24,200, 24,500, it's the Nifty where you could see 10,000, 350, 400.
In terms of stocks, Ashwani, what would you do?
See, Escorts has completed a correction and has come out with good numbers, etc. So that's a buy with a stop of 868, target of 900. Kotak, where all the money seems to be getting attracted, that's a buy with a stop of 1,085, target of 1140. And PC Jeweler continues to make new lows. That's where you can sell with a stop of 314, target of 298.
We were talking about Motherson the other day. It's doing well today.
See, again, quality stock, and basically had reached extremely key supports at about 300. So chances are it'll get back towards 380, 390. This is a good time for people to buy into strong stocks like Escorts, Tata Global. A variety of stocks are completing their corrections, even something like a Maruti.
What about this move in pharma? You give it any credence? 2 3/4 higher on the index.
See, the only positive is that most of these stocks are at multi-year supports. Now, whether they can, make fresh highs from here, that's debatable. But given that money is coming out of key banking stocks, chances are it's going into very oversold type of defensive stocks, if you may. So this year will be IT, pharma, consumer, and people will in general probably move away from financials a little bit.
All right, Ashwani, thanks very much for joining in with the afternoon trades. And just a word in Motherson Sumi, there's a board meeting also that's being held in the stock now at the high point of the day ahead of that. But the stock in focus is also Canfin Homes. So that stock is taking a bit of a hit as Canara Bank called off the divestment process of the entire stake that they held in Canfin Homes. So earlier this morning, we spoke with the management of the bank. They say, and they list out that the reasons actually why this was called off is because the bids received were not in tune with the valuations.
The price bid did not match our expectations, so we decided to call off the current process. So that was the reason, only reason. Canfin Home, overall, if you see, fundamentally, it's a very strong company. Their housing loan portfolio, the total portfolio, 90% is direct housing loan. And the other parameters also, gross NPA, net NPA, all are, better than the peer institutions. So now our intention is to further strengthen it, and then we'll see, what decision has to be taken. Since we were transferring the total control, so we were also looking for some, management control premium. So with that, maybe it was not matching our expectations. Current year also, immediately it's not feasible, but let us see. Or the other alternative, as I said, is, to strengthen it and keep it. That is also one alternative with us. Our, total standard restructured and NPA as on 31st December was around 12.2. Maybe 1 quarter or 2 quarter, this pain may be there. But finally, things are expected to improve.
Okay, so that's some sort of perspective coming in on this entire transaction, which has not really gone through. I mean, the market is up 78, 79 points. So things are picking up now. I mean, if you can have the Nifty up, you'd see, I don't know if you'll be able to see that spike, but yeah, you can. That's about, what, 15 points or so in the last couple of minutes of trade. 10,190, so you're now fast approaching the 10,200 mark. Let's see if we scale it today, or maybe we have to wait. Futures, I mean, the front month contract is now at the beginning of the series at a 45 point premium. So this is looking pretty good out there. We are going to get you a couple of other stocks in which there is news flow. Anisha is here with a quick wrap out of that list. Anisha, afternoon, over to you.
Hi Prashant, yes, I'll start with Dilip Bilkon. That one has been up around 7-8% after Bank of America initiated coverage on the stock with a buy rating. Now the stock has already been up over 200% over the last 1 year, but they still see an upside of around 20%. They like the valuations, they like the business opportunity, and hence a buy on that one. Moving on to some of the order wins. First up on BHEL, well, the company has bagged an order for over 4,000 crore rupees to set up a thermal power plant in Uttar Pradesh. Now we have been seeing the order inflow has been a lot tepid for BHEL, so this comes as a positive news for the company. Moving on to Reliance Infrastructure, where they have bagged road orders worth around 400 odd crore rupees. The company says that they're working hard to reduce the debt as well as increase the EPC order book to around 50,000 crores. So that stock is clearly excited. Moving on to Ashoka Buildcon, they have got letter of awards for 2 of their projects for a total of around 440 crores. Now it was already announced that they are lowest bidder earlier, but we are seeing a bit of sentiment positive there. Lastly, on Lupin, where the Canadian authorities have given a clean chit to the Pithampur 2 unit, so that one is also excited, was up around 5% at one point of time. Back to you.
Anisha, thanks very much for that. Well, earlier this morning, we also spoke with the management of Torrent Power. Now, this is a management that doesn't speak to the media very often, whether print or television. So it was a rare opportunity to sit down and chat with them about how the last 1 or 2 years have been. And, in the last 1 year, if you pull up the stock performance, the stock has actually not done much. And the primary reason has been the kind of financial volatility that the company has seen. But the management has clarified to us this morning that that kind of volatility is something they're looking to contain going forward, and also looking to expand their renewable portfolio capacity. Hear about.
We are sure that going forward, this volatility should get contained in our financial results, and our DGen and Uno Sugen projects should also start operating in the next financial year. We've been able to bring the AT&C losses at Bhiwandi from 68% when we took over about 10 years ago to roughly around 18% now. Within the next 2-3 years, we target to bring the AT&C losses to single digits. So we would be working very hard to achieve about 9 to 10% AT&C losses in Bhiwandi within the next 2 to 3 years. We continue to scan opportunities both across greenfield and acquisition opportunities in the sector. We will continue to evaluate opportunities that come through the NCLT route as well. But any investment decision or capital allocation policy would be determined solely based on financial and strategic perspectives in mind.
Nifty Bank is now up about 1/4%, so a far cry from what we had seen earlier on in the morning. And a lot of the banks actually picking up pace. So even ICICI Bank has picked up pace in the last make no mistake, it's still down about 5.5–6%, but at least it's off the lows for now. Let's focus on some of the stocks which are making news. RPP Infra has bagged order wins of about 234 odd crores. Joining in now to discuss this is A. Nitya, the whole-time director of the company. Ms. Nitya, good afternoon. Thanks much for joining in. So I understand that part of this order is for the upgradation of a highway and partly it is for affordable housing. Could you take us through both the segments in terms of what are the margins you enjoy, what's the IRR, and what will this take your total order book to?
Good afternoon. It is 234 crores, combination of two works. One is affordable housing in Tamil Nadu, and there is a concrete road in Nagpur in Maharashtra. The duration to complete the job is...
Okay, actually, we've got you on a very scratchy line. So what we'll do is quickly we'll try and redial you. For the moment, let's just focus on the market actually, because look at the Midcap index. It's now up about 230 odd points. So the afternoon is turning out to be quite eventful actually. Just dial 9.5% higher on that stock. It's gained some more ground in the last few minutes. Andhra Bank is another one up 4%, and the bulk of that has actually come recently. So a lot of these, I mean, even something like an Indo count, although that remains a stock where there's been quite a bit of volatility earlier. Hexaware is another one, Relpa, Relcom. So all of these are stocks, Prashant, that are continuing to do well.
I think, Sumera, we have RPP back on the line. Ma'am, go on. I think hopefully we have you on a better line. Please continue.
Okay, it's a combination of two orders. One is from Tamil Nadu, Lambod, and another is from Maharashtra, PWD. It's a concrete road work worth of 144 crore, and the other is about 119 crore. And both the duration to complete the project is about 18 months. And the profit margin, the EBITDA margin will be, for the affordable housing, it will be around 9 to 11%. And for the road project, we are expecting to close by 12 to 15%.
Okay. So what does this take your order book to, and also what's the bid pipeline like?
Yeah, as of 31/3, my order book will be around 1,050 crore. Including these two orders, it's around 1,050 crore. Apart from that, my L1 position is around 450 crore.
All right.
So the market is, I mean, actually it got up to about 10,195 or 196 or so, 10,189. So a little bit, there's, I mean, a dash higher, and then there is some give back which has happened. Just a few stocks, and these are in the futures and options segment as well. I mean, look at Just Dial. It was up 9%. A little while back, it's up 8%. There's Escorts, which we've been highlighting. There's a big move, almost 7%. India Cements is up 6% or so, about 150. Then, except Sun Pharma, the other large cap stocks are doing pretty okay. I mean, Cipla, Lupin, etc. Look at Aurobindo, which is coming up 4.5%. Sun, I mean, there's little move. It's, I think, at about the 510, 511 mark. Tata Global is up about 5.5%. So 274 on that one. Hexaware, 5.5% gains. And this is, of course, all, as I said, also in the futures segment, so large volumes. 392 on Hexaware. Motherson Sumi, we discussed that just a little while back. Jaiprakash Associates is also coming back. It's, I think it got to about 20 rupees or so earlier. 4.5% higher on Jaiprakash. And then, you know, stuff like Reliance Capital, Mindtree, NBCC. NBCC is up about 3.5% at about 198. So there's a fair bit of action across the board. 71 on the Nifty. Actually, if anything, incrementally, the market seems to be giving up some of the some gains. Very little, but what, 10 points or so over the last 5 minutes. Nitin Soni is Director Asia Pacific TMT at Fitch Ratings. He's joining us on the phone lines. We, of course, get him on board to talk about telecom sector in India. Nitin, thanks very much. Your assessment of Jio's move as far as extension of the Prime scheme is concerned for another year?
Yeah, thanks for having me on the show. I mean, say that there is no respite from the brutal competition in the telco industry. Reliance Jio is clearly, targeting to have a larger subscriber base. It seems they're not satisfied with 170, 180 million subscribers they've already got. And they want to, narrow the revenue market share gap with Voda Idea and Bharti Airtel. So it seems that in the short term, this competition will remain quite intense. Extension of Prime membership, continuing with the lower tariffs. The startup 4G pack starts at 98 rupees. So I think this kind of competition will continue. It is negative for incumbents, negative even for Jio because their revenue per user will decline as the foregone revenue and profitability which they should have got from the money paid by their subscribers.
So yeah, all in all, it's negative for the industry.
But it's extension, but there is no real, I mean, there are no additional discounts in that sense, right? So were you expecting one?
So basically, it's a foregone revenue in the sense that your subscribers would have paid you more for accessing the Prime membership. They wouldn't have to pay you anymore. And now new customers from 1st of April can also get the Prime membership. So if I'm not on Jio, I can subscribe to become the Prime membership, paying 99 rupees for 1 more year. So in the sense that it's deferring your potential revenue in a way to attract a larger subscriber base and remain competitive and to see the incumbents further bleeding down. And to basically see that, who will, turn up first and who will call that enough is enough. And, we have to focus on profitability. But at the moment, I mean, both incumbents as well as Jio, they are not focusing on profitability. They are just chasing the market share.
And are they succeeding? At least is Jio succeeding?
Definitely. I mean, within 2 years, I think this is one of the, the classic case where a new entrant came into the market with 6 months of free launch, managed to get so many subscribers, and now have 170 million subscribers and growing really fast. I mean, incrementally, they are also getting the larger subscriber market share. So it's just amazing that how fast they have gained the subscriber base in the industry, how fast the smaller and weaker telcos have exited the market, how they managed to, get the second and the third largest telco to combine and merge together, Voda and Idea. And it's just surprising to us that market leader has now the lowest ARPU at 123 rupees. And then still there is no respite from the competition. I mean, it doesn't make sense because they have invested $40 billion in this industry. The return on investment which incumbents make is mid-single digit. Which is unheard of in any Asian telco market. So are they going to target this kind of a return on investment on such a large investment is just surprising. So at some point of time, they will have to rationalize their tariff. But that point hasn't come yet.
All right, Nitin, thanks very much. Appreciate you joining in with that quick perspective. So essentially would mean, not necessarily, but could mean, further fall in ARPUs. As I said, not necessary, but possible. Okay, so 71 on the Nifty, 10,185. So markets haven't moved very much in the last last 10 minutes or so. It looked like we were making that dash for 10,200, which is 15 points away from it. From Samira, me, everyone on the show, thanks very much for staying with us.